Coming up today, a sea of green as stocks bounce back, inflation in line with expectations, bearish sentiment still high, the showdown in the Oval Office, China vows to bite back, the sharp drop in the GDP forecast, and Michael Saylor's advice to you as Bitcoin continues to drop. You're going to enjoy this one, guys. Let's go. Well, look at this. We can have a positive Friday after all. Most Fridays this year have been weak. We just put in a very bullish finish on an otherwise volatile week of trading. We've got a blanket of green across the board here, something we haven't seen in a while. Welcome back to the Click Capital Daily Market Review, everybody. I'm your host, Jared. And if you haven't already, smash that subscribe button and join one of the fastest growing finance channels out there, as I make these videos every day after close. And it's funny, we're getting this big bullish day just as we hit the most highly elevated bearish sentiment readings recorded in history. In fact, by some measures, it was a complete record for how bearish investors had got, considering yesterday the S&P was only off about 5% from all-time highs. Bounced back a bit here today. In other words, investors have never been this nervous before relative to how close the market is to all-time highs. Did we just see another classic gotcha? On the back of these elevated bearish readings, and hence why I made a case for you yesterday, it could have very well have been a buy the dip opportunity, as many others out there continued to warn you to be careful and keep you scared out of the market. Just going down to a 5-minute chart on the SPY here, so we can take a look at the price action. There was yesterday's close, 585. There's the post-market to 8 p.m. We have pre-market open at 4 a.m. New York time, and pre-market trades for 5.5 hours. The official regular market open 9:30 a.m. And the market's so good at doing this. Everyone's watching, these so-called key levels. The market will take them out, run all the stops, and then reverse back, and even did it again midday, taking out those lows from first thing in the morning. And this is when Trump and Zelensky were having the meeting in the Oval Office, which turned a bit heated. Market was selling off, but once again, my reversal signals nailed the low there. We got a nice momentum thrust up off the lows, and it doesn't look like it, but from those lows just after 1 p.m. into the close, S&P 500 rallied 2%. That's a really strong late day recovery, and something we haven't seen this year, as we've got so much headline risk that the market's normally been taking risk off going into the weekend and selling off. So to see it rip like this into the close could be a bit of a tell. Same deal with the Nasdaq. Looking at the Qs here, actually ripped up a bit over 2% into the close, and the Russell as well. Pretty good recovery, not as much as the S&P and Qs though. But stick with me today because I'll show you what I think could be a good pairs trade on the Russell and another ETF, and I'll show you my reasons for that later. And just looking at my S&P 500 oscillator, once again this morning, an early trader did get into oversold territory before quickly reversing back here. This is kind of a bearish to bullish pattern we've got. We can see that in the sector trends, starting to get a bit of green back up at the front. And so the market may have potentially found a short-term low this morning at around 58.38 on the S&P. And so the market may have been relieved to see PCE inflation come in line with expectations, as we'd been thinking. But what's really got the markets a little nervous of late is tariffs on Mexico and Canada, set to go in effect next week on the 4th, along with additional 10% on China. However, I'll get more into that later on, as the market may have found a low before the start of these tariffs, as it's seen it come in, may have already priced it in. But regardless, we still finished down for the month of February. Today was the last day of February. And since next week is the first week of the month, we get the jobs report on Friday. So that'll be the next big piece of economic data we'll be looking at. But even with this really good turnaround and recovery in the market today, pretty good price action in my opinion. Fear and greed index, still in the extreme fear zone. Not many investors buying this dip, still very skeptical and convinced that tariffs could potentially topple the global economy, even though they've never done before in history. And that's the thing, every time we get these elevated fear and bearish sentiment readings, it always feels different this time. Like there's some very important technical reason why this time is different, but the truth is, that's the case with all these fear spikes. There's always a good reason to sell your stocks. But the fact is, the best time to buy stocks is when you don't want to, when it feels really bad. It can often pay to go the opposite way of your first thought, as our natural reflexes in the market are often wrong. And the reality is things are never perfect, and if they are, the market's more closer to a top. If you wait for everything to be perfect before you buy, but like the saying, it's always darkest before dawn, and I think that plays out a lot in markets as well. And again, this bearish sentiment I've been seeing all throughout my social media feeds this entire week, and it's not just the AAII investor sentiment surveys, it's not just the fear and greed index. I also noticed a spike in bearish sentiment comments on my videos here on this channel, Click Capital, which is known for being a bullish channel, given that we've been in a bull market for 2 years now. And just to show you a few of those comments from yesterday's video, which is actually on track for being the most watched video on this channel. So thank you to everybody who watched it and engaged with the video. You're going to enjoy some of these comments. My positive outlooks on Nvidia and Tesla is only based on a fantasy story. Both companies are running on for a while. robo-taxis and invisible AI. Wake up, every fairy tale comes to an end. Another one, not sure what that word is wrong with me. I asked him if he could speak English. Another one, the AI crash started 2 weeks ago, and it just goes on and on. The only reason to buy Tesla stock is that Musk will give government contracts for himself, which he can't actually. He's heading up Doge, basically auditing government spending to making recommendations for the president. But also do get plenty of good comments, so thanks to everybody who can actually hold an intellectual conversation without being a keyboard warrior and hiding behind your screen. Also get some funny ones. I have no evidence, but you're wrong. That was a good one. And again, something I get accused of a lot, and I'm just going to address for a minute here. One yesterday, it's okay to be bullish, but this channel only seems bullish, for which I said that's because we've been in a bull market for 2 years. And so that's something a lot of people that might be new to this channel don't realize. This is not something I just started talking about 2 months ago, because just looking at the most liked comment yesterday, long-term regular viewers know I'm one of the few rare non-bearish YouTube channels. Fact is, just like mainstream media, when you push fear, it generates more clicks and views. However, as my long-term viewers know, I've been bullish the whole time since I started this channel back in early 2023. And one of the first videos I posted on this channel was titled, AI is shaping up as the next bull market leader. The entire video's focus was on my theory that AI could be the next big thing. I posted that on the 13th of January 2023. Before everybody was talking about AI, and this was back when Nvidia was trading around $16 a share. And admittedly, I did get a little bearish there. In Q2, Q3 2023, we did have a few economic indicators that were suggesting we could get a recession, which normally happens on the back of a Fed rate hiking cycle. However, the AI boom just overpowered that, and by 2024, I released those hedges on my portfolio, and as my viewers know, I turned back bullish, for which I still am today. And so one of the indications to me back then that AI could be the next big thing was this headline here. Microsoft considers a $10 billion investment in GPT. They were lining it up. GPT had just been released. I started using it, thought it was awesome. It was a game changer. And Microsoft CEO Satya Nadella said it himself. He thought AI was going to be the next big thing. And I'll just quickly play you this clip here so you can see what he said back then.
I think the next phase, if I had to sort of say, if you say mobile and cloud was the last paradigm, the next really is going to be AI. And that's going to happen in the next, I would say 2 to 3 years is going to be as big. It'll be more like I take it back to 2007, 2008 is when cloud and mobile became big. I think we're in that phase when it comes to AI.
And so that really caught my eye, similar to how Jensen Huang is saying today, robotics is going to be the next big thing, and hence why I'm positioning for that. But anyway, my point is, I have continued to be bullish for a couple of years, not just because of the AI and robotics boom, which I think is revolutionizing society, but because simply it pays to be a perma-bull. How many billionaire short sellers are out there? Very few. Most of them are out of business. Jim Chanos, still crying about Tesla every day in his X feed. The biggest, best investor in the world, Warren Buffett, he never shorts stocks. He just rides out the bear markets with diversification and a mix of assets. But that's the thing with financial media, the fear, it just works and grabbing attention. But over the long run, stocks are the best performing asset, and people focus too much on these little blips, which will inevitably get another one at some point and they will claim they're all right. But in my opinion, constantly calling for the crash and to be careful, pretty lame, and it doesn't make anybody any money. And simple math tells you can only make 100% when you short something. Stock can't go below zero. However, I've had many investments when the stock's gone up more than 100%. And so buying stocks is always an asymmetrical bet if you can ride out the short-term volatility. And so like I said, if you want to stay up to date with markets, stay focused on the opportunities, and not constantly get scared out, then you're welcome to subscribe to this channel, where I'll always share my mind, give you my thoughts, some trades I'm making. Unlike other YouTubers who always play it safe and sit on the fence, saying markets could go either up or down, I'm really not sure what value there is to be had in that. Maybe it's just entertainment for some. But anyway, just moving on to the charts. Looking at Nvidia, did gap down, traded a little lower, is trying to defend the support level here around 120. And a pretty good bounce back today, up almost 4%. Like I said, we can get some funny business around earnings. The numbers and guidance came in great. Gapped up, sold off hard on the lows, gapped down, traded back up. Remember, Nvidia's on a forward PE of 29 now. I think that's actually a little cheap for an exceptional company like Nvidia. Now, of course, we've still got plenty of headline risk as we make our way through all this tariff stuff. And China could still throw a spanner in the works on the chip trade. But overriding that, and 10 times more powerful in my opinion, is the secular trend and the huge compute power acquired from the world. Now and over the coming years, Nvidia is literally powering that. Also, just taking a look at Tesla. Did dip down this morning as well into my buy zone. Didn't quite reach the level I want to get filled at, 270, and it may indeed not reach there, as this could potentially be a bottoming candle. Like I said back here, even though we had some reversal signal, telling us the move might be a little exhausted. It wasn't really a convincing looking bottom. Traded back up on low volume, and then we've rolled over on heavy volume. But this is the kind of stuff you see in market lows. And considering we're 25% below the 50-day VWAP, that is quite technically oversold here. DSI still oversold, -13. Do have a bit of mixed seasonality, so very well could bump around and consolidate for a little bit here. But I'll stay disciplined and just add to my long-term position if I can pick up a few shares at 270. Otherwise, I'm all good with deploying the cash somewhere else if not. Just the same as if Nvidia takes out these lows. I would love the opportunity to pick up a few shares around 110 and even lower if I could. If we were to get a sharp drawdown from the 150 levels, I think that would be a good opportunity and good value to get into Nvidia. And just looking across other risky assets out there, may have just got a big buy the dip on Bitcoin. And let's take a closer look. Since it trades around the clock, let's go down to the 1 hour chart. And again, that kind of looks like a bottoming pattern potentially. You get that real exhausted sell-off, the reversal signals, and then we fire up on volume. Got a momentum thrust there. And a little bit so on Ethereum, actually getting down. And once again, the market good at just taking out those support levels before reversing, giving us a bit of a hammer candle formation. So we could be close to finding a bit of a low in crypto here. Otherwise, if we do convincingly take out these support levels, that just makes it harder and harder to get back to all-time highs. And because Bitcoin's similar to Tesla, it's so hotly traded, people either love it or hate it. It's always going to have these wild swings. And even though I think it's a little technically oversold here, maybe shaping up for a dip buy, I wouldn't go as far as Michael Saylor and sell my kidney to keep Bitcoin. If you don't use any leverage, you should never find yourself in that position. However, this isn't the first time he's shared his infinite wisdom with his millions of followers. Like Peter Schiff correctly pointed out, he's previously told people to max out their credit cards, mortgage their home, basically just bet your entire life that Bitcoin will go up forever. But again, it's not his first rodeo. He learned a lot from his last pump back in the late 90s, did a similar thing. Skyrocketed his stock to the moon while he was offloading stock, crashed, investors lost billions, and he actually got charged by the SEC for accounting fraud. In addition to other charges he's had throughout the years for tax evasion, really hates the system, doesn't want to contribute anything to society. He just wants you to pile in on top of him. For what a lot of people are saying with Saylor and MicroStrategy now, this time is different. Well, let's give it a year or two and see how that pans out. So I wouldn't touch MicroStrategy with a 10-foot pole, but some other crypto-related stocks here are indeed looking like they potentially put in a short-term low. Coinbase, the biggest regulated US exchange. 3 reversal signals, good bullish seasonality, oversold in the DSI, institutional buying turning green again. Potentially be a good swing trade there with a potential reversion to the mean, playing it back up to the 50-day VWAP. Some others as well starting to shape up. The Sprott Uranium Miners ETF. Nice solid spinning doji candle there on big volume. We've had the reversal signals. Little soft in seasonality. However, everything else could be pointing towards a dip buy on this. Because just like the world needs a lot of GPUs, what powers all those data centers is electricity, with nuclear the most efficient source. NuScale Power, similar look ahead of their earnings on Monday. Another nuclear-related trade holding its own today, Lightbridge. And looking at the previously hot space trade, we just got earnings from Rocket Lab. Even though they came in with a pretty decent miss, revenue was in line. Monster gap down this morning. Nice recovery, actually finished above yesterday's close. Same deal with Archer Aviation after their miss last night. And that's always a good sign when a stock can rally on bad news. What happens when we get good news? Also looking a little oversold, the AI trade, C3 AI. Pony AI coming out of China could be setting up for a dip buy. Normally a good pattern when you get these big momentum volume thrusts and a really low volume pullback. Typically the market wants to go where it can find the most volume, which could indeed be higher on this one. And all the hot themes have been pulling back the last few weeks. Biotech, there's Grail just touching its 50-day today. Hims and Hers Health, massive volatility the last couple of weeks, even after their earnings, which did come in line with expectations. Really good guidance. And this is a great company in telehealth. For a lot of medical products, people would rather order them online or just with a quick video consult with a doctor and they get it mailed out. Not to mention they offer a lot of the same drugs but for a much cheaper price. Got really good growth. Another one that's come off a lot the last couple of months, SoundHound AI. Again, they absolutely missed on their numbers, but the market put in a solid rally there today. And a look at some other risk-sensitive stocks. Robinhood, not really a convincing bottom here. And same deal with DraftKings. Like I said, we're still going to get plenty of negative headlines over the coming week or two as tariffs go into effect and China's looking to bite back. Plenty of fodder for the financial media to work with. And the VIX is still somewhat elevated here at 19.6. With the VIX term structure still somewhat flat And we did briefly go into backwardation this morning, the VIX front month. Higher than the second month. Typically, all bad things happen when this spread is above 1, however, they can also mark the lows as well. Once we go above and back under, and we did get a pretty good dip there in bond yields. There's the 2-year, losing 4% today. The Fed could very well cut in a few months, as PCE inflation did come in line as expected, 0.3% month over month, and 2.5% annual rate. On the headline, core PCE was 2.6. And just looking at the hard data on that, 2.6 is actually the lowest reading we've had since March 2021. So as I've been thinking, inflation, although very well, there's still upside risks. You can theorize and worry about anything, but just following the data and the trends, inflation is still tracking sideways, even potentially coming down. As I'd been forecasting, just looking at trueflation, which actually ticked down again today, 2.17. So that's pretty good. We've still got good economic and corporate growth. While inflation comes down, Fed could very well cut, bring the cost of capital down. Not to mention there's still got 400 basis points of ammo to work with should we see any trouble this year. Not to mention they'll fire up quantitative easing version 5.0 at a moment's notice if they need to. In addition to the Trump put, he's not going to want to see the markets get created on his clock. But again, the headlines and narratives are so bearish. Another few today. The US stock market is looking played out. It's time to shift some assets abroad. The Trump trade is stuck. A hedging strategy for nervous investors. Even the bro bubble is bursting. These are the headlines that are getting fed to investors day after day. It's no surprise to see bearish sentiment elevated, even though we're not that far off all-time highs. With one of the most hated stocks being Tesla. Some journalists, every single article they write about the company is negative, like they want it to fail so badly. This to me right here is a bullish signal. Not to mention we're getting signs that they're really ramping up talent for their Optimus bot release next year. I don't think the market's really appreciated the new and inevitably huge industry of humanoids. A lot of people still think this is something out of a sci-fi movie or something. They're actually going to be in people's homes starting next year, not to mention businesses as well. But it's not that unusual to see a bit of volatility and consolidation. Seasonally speaking, we're in the first quarter of year 1 of the presidential cycle. And given the mainstream media's relationship with Trump, we're likely going to have 4 years of this kind of media circus and headlines. No doubt we're going to get plenty of bouts of volatility, which can be used to your advantage. But it was interesting after today, the market was wobbling on the back of this contentious meeting between the leaders of Ukraine and the States, in which it looks like the supposedly big minerals deal has fallen over. The news conference was cancelled, and these two aren't clearly seen eye to eye. Zelensky still wants Americans to transfer their labor into his pockets, taxpayer money. That adds to the long-term debt that will have to be paid back somehow, some way. Hundreds of billions of dollars already been sent. And it's interesting when I talk to people who are very much for this war, when I ask them, if you believe in this war so much, why don't you go over there and fight it yourself or send your son over there? Then whenever I say that, they get a bit confused because they realize they're not willing to go over there themselves, but they're happy to send somebody else's son over there to die for their clueless opinion. So this has still got to all play out, but judging by the price action today, the market doesn't really care. And that's because the odds of a full-blown global war between the States and Russia has come down a lot as the lines of communication have been opened back up. And Trump very much wants a peace deal to stop sending American money there. And so with that and tariffs, there's a lot of things going on. There's a big kind of reshuffling of global political affairs, how the world's run. US government spending. Big changes are happening. It's no surprising to see volatility, and we probably haven't seen the last of it. Trump said he's going to slap another 10% on top of the already announced 10% tariffs on China, in which they bit back and said they will take all necessary countermeasures to defend its legitimate rights and interests. But again, there's a big misconception out there. I see this in my comments all the time. Trump just wants to tariff everybody. He's trying to kill the global economy, etc., etc. The fact is, the US actually has the lowest average tariff rate against all of its major trading partners compared to what they impose on US goods. He's looking to level the playing field because the US does have a huge trade deficit. But me personally, I don't think tariffs are going to topple the global economy. I think they're actually going to result in some good deals getting done, although that very well could take a while and may have to get worse before it gets better. Fact is, US does have leverage over all its trading partners, and the end result should be them lowering tariffs on US goods, which helps US exporters a lot. And so like I've been saying, what happens if the purpose of all these tariffs actually work? How many people are talking about that? Not many, if any. But again, another headline today getting the bears riled up. The Atlanta Fed GDP tracker sees the US economy contracting in the first quarter. Just before the election, the Fed was forecasting GDP to grow at 3%. Just a coincidence now. After the election, they've significantly dropped their forecast. However, as usual, you got to look at the detail. We don't just get an almost 4% move between their last forecast and their latest today without something going on. No doubt the Fed is worried about the impacts of tariffs. Jay Powell said it himself, but businesses are too. And so they've been front loading, ordering a lot of goods before they get hit with tariff. That's why the trade deficit blew out, widening to $153 billion in January, meaning Americans sent $153 billion more overseas to buy imports than what they sold in exports. And since production and business buying goes into GDP, that could very well cause a soft Q1 GDP print. And there are other technical considerations to be had. Just like Jim Bianco correctly points out, everyone needs to calm down. About the Fed GDP forecast, he said it was driven by one statistic, merchandise trade imports, which can snap back as early as next month and take the forecast back up. The world is not ending. I agree. Look at this ridiculous move on the chart. It's almost comical. Because as Jim points out, there's the merchandise trade deficit, which did indeed blow out as businesses are clearly front-loading on imports. So again, this is more short-term noise in my opinion. And just looking at economists' forecasts for GDP, Q1, Q2, Q3, Q4 this year, on all countries around the world, we scroll down to the States, they still think the economy is going to grow 2.3, 1.9, 1.5, 2.1, which is down a little bit off last year, but again, much better than other Western markets, still struggling for growth. And just looking at prediction markets and what they see the US GDP growth in Q1 be, you can see this latest forecast did spook the market. This afternoon, just before that release, the market was thinking we're going to come in about 2.4%, but it's since recovered, now sitting a bit above 1% with plenty of probability above 1.5. But even so, we could very well get a soft Q1 on the whipsawing of this trade deficit. And the market's still pricing GDP growth for this year at about 1.7. However, that was a big dip, like I said, just from a couple of hours ago. I wouldn't be surprised to see this bounce back. As companies are still making record profits, CEO confidence has really bounced back. S&P 500 grew its Q4 earnings 17%. Nvidia and the others still growing like crazy. I think there's still plenty of positive momentum out there in the fundamentals. Get a few more earnings next week, looking at the retailers. Target, Best Buy, Foot Locker, Costco, and a few other apparel companies as well. Market still thinks the Fed's going to cut in June. May even get another one in September, which it looks like the 2-year is starting to demand as well. Kind of reminding me of July, August last year. Fell off a cliff, had people convinced we're already in a recession. But then the Fed cut rates and everything was okay again. And who knows, we may get another bond yield tantrum. Because if this thing keeps selling off, we get down to 370, 360, we're going to see the recession headlines again and might just spook Jay Powell into doing another cut, and then the market turns around and says, thank you very much, which the stock market was pleased with as well. Now let's move on to the Russell. I think it's the most oversold index out of them all, and like I alluded to earlier in this video, could potentially be setting up for a pairs trade. Long the Russell, short the S&P, currently sitting at a prior support level where we had a vicious bounce in July last year. When small caps turn, they can turn hard, and so they have been soft for a few months here. May have already put in a bottom in the Russell versus the Qs, and probably looking even better and more oversold. The Russell 2000 versus the S&P 500 equal weight ETF, RSP. It's actually taken out yearly lows, really stretched here. Reversal signals could be a potentially good pairs trade opportunity. Long the Russell, short RSP. Back to the 50-day VWAP. But as usual, please do your own research. I'm just sharing my opinion with you and some of the things I'm seeing out there, like commodities coming off versus treasuries. Massive buy the dip candle on Apple. Potential hammer there on Microsoft. Google as well. Got really oversold there yesterday. Pretty solid finish to the week here on what's normally been a nervous market going into the weekends. And so American stocks have been weak of late, while Chinese stocks have been strong. Are we seeing a potential reversal of this pattern? Saw Alibaba pull back a bit there today. Still a bit above its 50-day here, 16%. Kind of hard to see there not being a bit of volatility in China now that we're getting a tit for tat on tariffs ramped up. But like I said, on the Qs and main indices, pretty constructive there on today's close. That strong ramp into the finish. And SPY as well. Did more volume than last Friday, even though we had a big sell-off and it was OPEX. So that to me looks like the market ran into a strong bid. Even on those headlines we got today, the drama coming out of the White House, the Fed revising its GDP forecast down almost 4% overnight. Are they trying to spook the market? Because it didn't work. Billions of dollars came in there and gobbled it up. But volatility is still a little elevated. We could see a bit more of it next week with the onset of the tariffs set to begin. Could also potentially set up for another late minute deal, get a further relief rally, but also the jobs report, the Bureau of Labor Statistics. Are they going to go the way of the Fed and start feeding the market hard data? Unemployment rate forecast to come in at 4% next Friday morning. So we'll see what we get out of that, along with some manufacturing and services PMIs. But like I said, guys, today in the morning, my S&P oscillator did go into oversold territory, and that is a pretty high win rate indicator as well. The bullish signals on this indicator. Quite a few things go into it, not just technicals. It looks at volatility, market breadth, and a few other things. And typically when it goes into oversold territory, especially when the market's in a bull market, it's usually a good sign of a potential low or we're near a low, just like it did back here in October 2023. Gave us a pretty good bullish divergence there. Same deal on March 23, and it nailed the low in October 22, the start of this bull market. market. I'll never forget that day, the 13th of October 22. Massive gap down. Fear was off the charts. And the market did this monster bullish engulfing candle. And that was the low of the 2022 bear market. That's all I got for you this week. And like I said, if you haven't already, subscribe to this channel and I'll keep you updated every day on what's really going on out there. And I won't just try and sell you fear and keep you scared out of the market. Have a great weekend and I'll see you again on Monday night. Cheers.